back, folks. S&P's positive by 11 points right now. We got the NASDAQ 100 slightly in the red. To talk about some of this market action, folks, we're going to jump over to Tim Ord. We talk to Tim every Tuesday and Thursday at 30 past the hour. And you can reach Tim at his website, ord-oracle.com. You see him right there. And at TFNN.com, folks, right under the services tab, he's got 2 great webinars. The Secret Science of Market Tops, how to identify market tops, as well as 6 secret ratios every trader should know. And we talk about a lot of those ratios when we talk to Tim right here. Tim Orr, good afternoon.
Yeah, good afternoon. So anyhow, those people that, I'm a visual guy, somebody tells me their email, I don't remember it, but anyhow, I just want to make this point. Tim at ord-oracle.com is my email address. So if you have questions and stuff, you can
Tim at ord-oracle.com, right at the website. It'll be easy to remember. I'll do it this way, right there. I'm Tommy at TFNN.com, folks, and he's Tim at ord-oracle.com, right? You make it nice and simple. Perfect. All right, yep. Tim, what do we got going on?
Well, it's anyhow, I think we're at a low right here. We got a little panic in the trends we had the last couple of days. This is the SPX VIX ratio, and with the Bollinger Band, and right below it's the daily, and we're running into the lower Bollinger Band right now. And this is on the SPX and also the SPX VIX ratio, and all these pink circles here are times when you're breaking below or have broke below the lower Bollinger Band. And so today we're right here. This is a blown up view right there. So we hit it here. We kind of touched it, I don't know, a day or so ago, and it kind of fell back down. But the SPY did hit below the lower Bollinger Band. Now we're right above it. So anyhow, that's when you start getting above or below the outer Bollinger Bands, you're 2 deviations away from standard deviation. The standard's the 20-day moving average, and that's what this. Well, get my tool back here. Hang on 1 second.
Yep.
For some reason, okay, should pop right up. Well, it's not. Anyhow, if you get below,
that's all right. We got your cursor, so we can see everything in your cursor. Go for it.
All right. So anyhow, so that's the 20-day average. So we're too down. In other words, we're stretched too far in either direction. And here's another kind of indicator. This is the here, come back up. This is the SPX tilt ratio daily. Kind of a similar thing going on. This ratio gets stretched too much to either downside or upside. And I circled all the times. We're below the lower Bollinger Band, and right now we are. The bottom window is a 5-day average, so that's the rate of change is a 5-day rate of change of the SPX tilt ratio, and you get below -3. When I did it, it was around -4. That's also stretch. It's kind of the faster the market goes in any direction, either up or down, especially down, it works a lot better. That's usually an ending pattern. That's when panic's hitting, and it's acceleration. Accelerations come right at the end of a move. So if you ever see a market gently go down, those are usually real dangerous. The ones that go super fast are exhaustion to the downside. And we're kind of seeing that on a short-term basis. The top window is a 10-period RSI, so that's 2 weeks of RSI of the SPX tilt ratio. It's also stretched below the Bollinger Band. So I think we're just stretched too far. Here's a little bit more panic. When I did this, I don't know, a couple hours ago, the bottom window is a 5-day trend. When I did it, it was 1.31. So I went back, looks like almost a couple of years. Every time the 5-day trend got above 1.3, when I did this, 1.31. And so I did the red line type thing. Then the top window is a rate of change, 5-period rate of change of the SPX tilt ratio. So I only did the circles or the red lines when both those indicators reached bullish levels. And all of them came in lows. This is the SPS right here, and it works out pretty well. So I always at least have 2 indicators that reach bullish levels. So I'm doing some stuff with the SPX tilt ratio, and also the trend. So it's different types of indicators, kind of saying the same thing. Do we start up tomorrow? I don't know. Sometimes, if you can kind of tell there, we went sideways. Looks like about 3-4 days before we started to go up, but we appear to be at a low area. I'll put it that way. So does this start the big rally of the year? I don't think so, but I do think we'll get back to the previous highs. The reason why I don't think this is a start of a major move is because of this weekly SPX fix ratio. If you notice, we kind of went sideways here on the S&Ps, and this ratio just went down. Normally what happens, you go back up for another higher high on the SPS, just like back here. We hit a higher high back at the the tariff wars back there, and the ratio got a lower high. Same here back in looks like September, October. This is when a great signal didn't do much, went down a little bit right there. But to me, if we rally back to the old highs, I don't think this VIX SPX ratio is going to get back to the old highs. So it's going to be a higher low, because we're too deep now for this rally to get back to the old highs. And so if the SPs make a higher high and this ratio makes a lower high, then you got a condition like this. So that's the reason why I don't think this is a market that's going to keep, even though we may go back to the old highs, I don't think it's going to keep going. I think the next high could produce a decent pullback. So that's my take on it. I don't know if it's kind of just been a sloppy trading market over the last couple of months, because we kind of been going up and down, but it's just fails to go down much, and the rallies kind of fail to go up. But I think sometime in March, maybe, I don't know, or later February, if we do try to rally, we manage to hit a new high on the SPS, and this ratio is very far from the like here, then I think it could set up for a pullback. I don't think we're set up for a major pullback, but some sort of, 5% move to the downside, maybe more, maybe get to a lower Bollinger Band. Not sure. So I'm saying,
I was just going to say, because it's pretty remarkable. I just got a chart of the VIX, and you know what the VIX is, and a lot of people do if they're listening to your show, right? Your interview right now. The VIX, just remarkable how much premium is getting. It just continues to rise overall, as in from Christmas Eve, $13, and we got a 20.43 right now. Yeah, pretty remarkable. Maybe hinting, Okay, we're going to come back, folks. We got to take a quick break. I hear that music. We're going to come back. We're going to talk some metals with Tim. We'll come right back. Stay tuned. Welcome back, folks. We're here with Tim Ord. Remember, you can reach Tim at his website, ord-oracle.com. And he's got those great webinars. We talk about the ratios, folks, right under that services tab at TFNN as well. Okay, Tim, we talking GDX?
Yeah, we're talking GDX. And
all right,
it's kind of a repeat, update this chart. The bottom window is the GDX up-down volume percent with the 50-day average. So that's like 2.5 months of data to create this chart. And anything above zero is bullish. That's all this blue area going here. The white areas are when this indicator is below zero. So we've been above zero since early 2025, and it's still holding strong. So it doesn't attempt to take out all the wiggles of the market. This indicator is designed to catch the bigger trend. So right now, the market could be off, 5-10% actually, because I think this area back in, this indicator on a bigger time frame remains bullish. So let's take a look at a smaller time frame. This is the 18-day average of the up-down volume and 18-day average of advanced decline. So this indicator is 3 weeks, a little over 3 weeks, and so it measures a smaller time frame. You get a little signals. There's the pink area here is when both those indicators are below -10. Anything above -10 is bullish, and that's all the green areas here. So you get a little more signals. Last time we got a signal was early November, late October. Went down, came right back up. went back down again into January 2025, got above zero, or minus 10 rather, and stayed above minus 10, and we're still above minus 10. We're coming in plus 16 on one and plus 20 on the other, pretty strong. So momentum rules all markets. So momentum's up. So I'm not saying we can start a trading range, and this is what I think what's in front of us, I guess you might say. So this is the weekly GDX, and it goes back to about a year and a couple of months, whatever. Back on this day right, or this week right here, January 26th, and we had a big volume day, and it actually drew a bearish engulfing pattern. A bearish engulfing pattern opens above the previous high and closes below the previous low, and so that at least flips the market sideways. If this one works out, and so to get through the previous low, volume has to be, this day came in about 200, or this week came in about 270 million shares, and the week after, January 26th, we tested that low, and if you notice, volume came in, I don't know, less than 200 million shares. So if you can't get through the previous low on equal or higher volume, it'll attempt to take out the previous high on higher volume. Well, that's the same high, or that's the same week. That high comes in at 113.50 range. And so that's probably where we're going to head. And now to get through that high, you're going to need 270 million shares. So I don't think that's going to happen. It could, but we'll have to wait and see. But that's probably where we're heading. So if you go up and test that high and volume drops at least 10%, most likely it will, it's going to find resistance, and the whole story starts over again. If you can't take out the previous high with volume, it'll attempt to take out the previous low. Well, the previous low is now this low. So anyhow, that's how you get a trading range going. So you bounce around. But what I'm going to be looking for, the bottom window is the weekly GDX, or GDX GLD ratio. If you notice, this market was making higher highs right through there. It didn't close higher, but this one did. But anyhow, you made higher highs. If you notice, the ratio made lower highs. And so we haven't hit it. We hit a high back here, so we're looking at this high to be broken. If we go up and we make a higher high on this GDX GLD ratio, then we may indeed keep going. But if we don't, we make a lower high and we test that previous high on lighter volume, then you got two different indicators saying the same thing. You don't have enough volume to get to the previous high, and this GDX GLE ratio is making a lower high. So we'll see how that gels out. But I think we're probably going to flip sideways here. We're probably going to go up and test that high, then we're probably going to go back down, test this low, and we're going to spend some time building a trading range. So nothing, I don't think, significant to the downside other than test the previous low. And that's not bad. I mean, no. Markets are, going sideways build energy for the next move. And this
Can I ask you because I get these questions, right? And they're tough questions. People have been in this market, and yeah, that's not that bad at all, folks, right? As in, we just went. It's been a rocket ship, right, Tim? I mean, we're sitting at 100. If you're testing the recent low, folks, there's some volatility. Wait, because I get the questions, of course, saying, I love this market, right? But the heat's a little tough. I don't know about taking the heat. I'm thinking about selling. Is there an area, or if you got that question? Because I get them. Even Gold Report subscribers saying, "Oh man," and then silver's its own deal. I get the same questions about silver, but for that type of wood, what would you say to somebody like that just says, man, it's just so volatile? Is there an area, if I'm trying to buy some of these equities, if I'm trying to buy something like the GDX, that you break below that recent low? Is that where you might put a stop, or how do you look at something like that?
Well, actually, I think this low here is, that low, I don't know, the 93 area is probably
nice.
Going to be the buy.
Yep, right there.
Yeah, and that's. But we may test that a couple of times. This, we rallied for 2 years, so this consolidation, in my opinion, prove me wrong, which that's anyhow. We may move sideways for 6 months. Is what I'm thinking. Just because we rallied for 2 years, we're due for a multi-month consolidation. But what's
not
what's
that it's
happening?
like that or a pullback, but at some point you just can't go straight up, right? I mean, as in, that's yeah. And so if you want a healthy market, and I'm on this one, it would make sense that at some point we get a little consolidation for the leg higher, because it's been. And when you make that point, if we trade back to the lows, it's just been such a run up. If you're not willing to take, a $5 move on the way back, folks, we just traded. I just put it back a year from 38 to 113, right? And still, we're at 100. That is not, when you look at the volatility the metals have had, I mean, all we're doing is trading back to where we were less than a month ago on about January 20th on the way up, right? So remarkable. Yeah.
Yeah. So I'm thinking 93 area, give or take, is going to be that.
Okay. What do you have? What about silver? I think about the same thing. What do you think about silver for people trying? Is there an area? I mean, people are hodling. They're holding on for dear life, right? And that's one thing. But for people that are still trying to trade it, what do you think about silver? As it's, the
silver, the commodity itself.
Actually, the commodity itself, maybe even, or because the miners are, but what do you think about silver? Any?
Okay, well, let me work that up on Thursday.
Perfect. And we didn't even plan it, but that's a perfect teaser, because silver and I don't want to put you. That's quite a hot spot. Silver. Where's silver going, Tim? Come on, we'll find out Thursday, folks. Perfect. Yeah. Tim, all right. Thank you for the great conversation, man. The education. Stocks, right? I appreciate it, and we'll talk to you on Thursday. All right.
All right. Talk to you then. Thanks a lot.
Thanks so much. Folks, you can reach Tim at his website, ord-oracle.com, and those 2 great webinars. Like I always say, if you want to get into those ratios, man, and those ratios are awesome, we got a great webinar over at TFNN. It's $149. You gain access to the 90-minute webinar. You watch it as many times as you'd like. And ratios. We're coming right back, folks.